How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on U.S. oil. So recently we made a higher swing low on the 7th. So we said the bullish idea, let's recap. The bullish idea was we broke a swing high. That might be bullish momentum. So if we want to catch this bullish momentum or continuation potentially in a trend that's going up, because we're breaking structure to the upside, buy side liquidity is being ran out, we want to see if we could get into trend with that. So we have to wait for a higher swing low. We formed a higher swing low here on Tuesday, the 7th. 1, 2, 3. We'll zoom in for the people that are blind like me. So you can see that swing low, 1, 2, 3, was created. And today is Thursday. We got price to run down. It raids the swing low, actually. So it takes out that sell side and also takes out the previous daily low, Wednesday's low, and looks to be pushing higher. Right? We might be getting back up to this swing high that price recently created. Now, we did get price to run this swing high where this buy stops here and then reject back down. Now, could that be a sign that the commercials want oil to continue to go lower? They don't want it to go higher? Possibly. It's possible. That could be a speculation as well. I like to look at all speculations on both sides because there's buy setups and sell setups, but only the higher time frame is going to win. And that timing of when to get into that trend is very crucial. So we're very specific in what we're looking for. We do know simply in a bullish trend, buying after down days tends to be ideal. Just take a look at all the down days that we have so far for the year or for the month. We had one down day on Monday, the 6th. What happened after that the following day? We got an up day. Not that it was a large or super, expansive candle, but we produced an up day in general. Then another down day. Well, look what happens after the following day. Look right now, currently price is at the current high of the day right now, still pushing. It's making a record high for Thursday so far. So we can see systematically we can come in with objective ideas when we're in a bullish trend. Simply buy after a down day. Now, where you're going to place your TP and stop loss will vary, right? But general rule of thumb, you probably want it below the previous daily low or the last couple daily lows, right? We don't want it to be, a very large stop loss, especially if you're a day trader. But all in all, though, right now we are seeing signs that U.S. oil may continue going up. Sometimes you get that false rate, like I said before. You'll come up, make a swing low, price breaks the swing high. In this scenario, breaks the swing high. It rates the swing low one more time and then goes back up. You'll see that sometimes. That is definitely a bullish scenario. Still, you'll get a false raid on sell side liquidity just to get the market to go right back up. We were going to trade possibly into these inefficiencies. I'm not saying it can't happen, so don't be surprised if we get a nice wick down here because U.S. oil can do that. Do not be surprised. And then we trade back up higher. Or maybe there's speculation that, okay, there's signs that price action is actually going to continue going lower and maybe it's going to go out and take out these swing lows here. But so far, we got this higher swing low formation here. It was rated, but it's still technically a higher swing low. So there's signs that maybe we are going to continue going higher. Let's take a look at the DXY. So we have an intermarket analysis. Dollar looks to be going up higher too, right? Yields tend to be going higher. Currently, politically at least, the tariffs that U.S. President Trump might um, uphold against other countries on these imports and exports may actually benefit the dollar. That's a possibility, right? May benefit the dollar. Now, the rates currently looks to be expected to be cut. However, that doesn't necessarily mean dollar is going to get weaker. You'll see times where central banks hike rates, but the currency still devalues. We see a plethora of that everywhere. For example, if we take a look at Russia's central bank, they have a high interest rate. I think it's over 20%. But in 2024, they have the worst performing or one of the top worst performing currencies in the world. But yet they have the highest rates. And you'll hear me say, well, rates follow yields. But it's not as straightforward as it seems. Right now, we see that the feds are cutting rates, yields are still going higher, and dollars still going higher. Now, I'm not saying fundamentally rates going down, meaning yield should go down, dollar should go down. We'll see that. I don't doubt that we'll have retracements and pullbacks during this year. But so far, we've been seeing they've been cutting, but dollar's still resilient and going higher. All the other fiat currencies right now are doing poorly. Let's take a look at New Zealand dollar, right? Let's continue the intermarket analysis. It's dropping down. So far in 2025, it's selling off. Still dropping. Let's take a look at AU, selling off as well. Performing poorly against the dollar. GU, ooh, what a huge sell-off the last couple of days. EU, a little more resilient. Still hasn't broken that swing low there, but may potentially continue to sell off as well. After these two up close candles, trends can continue selling off, right? Let's take a look at gold, and then we'll bring it back home to US oil. Gold recently is still pushing up higher. Now you got gold, oil, and DXY above the monthly, right? January's opening price, don't forget, which is also, or, right, the yearly opening price. So it's 2 for 1, right? That's not correct. We can't be having gold up here. Take a look at the DXY. Daily chart. Clear this. We can't be having gold and DXY above the yearly open or the monthly opening price. That's a cracking correlation. So one of these are lying. Now, I'm not saying at times you'll see dollar and gold go up, right? They're out of sync and they're moving together. But when they're in sync, they should be moving opposite. They're inversely correlated pairs or assets. But at times you'll see them move together. And right now, I think they're going to sooner or later show their real hand, and gold is going to move opposite to DXY. So that is bound to happen. Eventually, we will see periodically, though, gold and dollar will rise together and drop together. And then we'll see a lot of the times them separate and go in opposite directions. So with that being said, if we could get gold possibly to sell off, we might be able to see US oil come back into play and go long, right? Oil might be in high demand this year for 2025. We'll see. Hopefully you found this informative. Peace.